Happy Thursday afternoon, everybody. Welcome to another episode of Moving Markets, the Safe Option Strategies Daily Market Update podcast. With you as always, I'm Jeffrey Dunyan, the owner and founder of Safe Option Strategies. Glad to have you here on Thursday afternoon. We're going to jump right in and talk about what went on in the market today, especially what happened with that retail sales report and why that affected things the way it did. That report had a pretty big surprise in it. We've been talking about that for a few days leading up to this. One reminder again, check out our different packages, our different choices you can get at sostrades.com if you want to participate in the trades that we send out to members of our program. We are less than 2 full months into the calendar year of 2024. We're already up almost 17% on the year. These are with the trades that we send out to members of the program that they can follow us along in if they choose. You want to be a part of those if at all possible and be able to take advantage of that. We have not, every trade we've closed so far this year has been a winning trade. We're off to a good start. Check us out at sostrades.com. See if there's a program or a package that fits your budget and is right for you. Make sure you email us if you have any questions. And I'm always going to make the request, make sure you subscribe to our YouTube channel or like us or send us a question or a comment, and we'll do everything we can to get back to you if you do that. Enjoy today's presentation. Glad to have you here. Good afternoon, everybody. Welcome to our Moving Markets podcast. Today is Thursday, February the 15th, 2024. At the time we're recording this podcast, the U.S. stock market has been closed for about an hour, maybe just a little bit more than that. And once again, an exciting day. The market's up big today. And maybe second day in a row, I did not call correctly what ended up happening. I thought one thing would happen, and we got quite a different thing. So let's jump right into it and talk a little bit first about where we're at with our current trades. There are no trade adjustments being sent out tonight. Nothing needs to be adjusted. Hopefully, you were watching Discord. If for any of those Safe Option Strategies members that are not a part of our Discord channel, I would strongly encourage you, send me an email or an instant message and let me tell you how to get on Discord, and make sure you look at that. Amongst other things, even though yesterday I said I was going to roll out the JP Morgan Long Iron Condor, it popped right at the open this morning, and it became a complete and total no-brainer to exit this trade with the 13% return. I hope any of you that were in the JP Morgan trade are now out of it. If not, even if you did roll out to next week, today's move up would make you guaranteed profitable at the close of the market today. So tomorrow morning, try to exit the trade. Get whatever profit you can and get out of the trade. Don't stay in it another day unless there's like some kind of crazy massive sell-off in the morning. I mean, futures on JP Morgan would have to be down 15 or 20% at the open. And then actually do that when the market opens for you to not be able to get out of that trade with profit. So make sure you do that. Also today, our Chevron trade that we only opened 2 days ago. I love when this happens. We get this from time to time, but this was an example of it happening in a really phenomenal way. Every now and then we get into a trade, and within a few days, 2-3 days, we're able to get out. We jumped into this Chevron trade 2 mornings ago as our new trade. And today, again, I put this on Discord, even though we weren't at the 30% that we targeted, only 2 days in the trade to get out with a 23.72%. I put on Discord that if you could get out with that, I know at least one person instant messaged me on Discord and said they were out with 21%. Somebody else instant messaged me through a different platform, just through my cell number, my text number, and said they got out with 24%. They might have just been rounding up the same 23.72 that I got, but that is just a complete and total no-brainer to jump out of that trade quickly and have that kind of profit in it. I hope that you got out. I also hope that yesterday when I put this new Home Depot trade on Discord, that you were successful getting into this trade. This one filled for me and already up, almost 2.5% in just one day on that trade. Now I'm not inclined to jump out of that one and take the profit right now, but excellent trades. we will absolutely take them and relish the victories early on with these trades. When you consider that we have now placed 8 trades for this calendar year, which means, out of 52 weeks, we've got 44 more trades to place. We're already sitting at a 16, almost 17% return. And every trade we've closed so far, we've closed with profits. So we're off to a great start, and we're going to just keep the momentum going like this and keep it running. So, congratulations to everybody that jumped in those trades with us and got out with some profit in a really relatively short period of time. The big story today, that these markets just continue to show resilience and continue to go up. After a little bit of sell-off on Monday and Tuesday, the S&P is right back up, right back to where it was at the open on Monday. If we have a flat to positive week next week, we're going to be looking at another positive week on the S&P, and I'm not even sure how many weeks in a row that makes us positive. You had almost had the one exception right here, but I think by the end of the week we actually closed positive back on that first week in January. So it's just that the resilience of this market is absolutely incredible, and I almost dare use the term staggering. Every single time I think this market is going to pause, it just continues to move up. We come down out of overbought territory, and then we're right back in it within another week. We come out and it looks like we might go right back in it within a few days. It's unusual for the markets to stay up in this part of the RSI for a long-term basis. Usually when you've got a good, solid, steady market, it kind of floats in here, but not half the time above and half the time below the 70 mark on the RSI. Well, I'm going to know in a couple of minutes if we got a smooth recording there. I accidentally advanced these slides a little bit more than I wanted to. And in the process of doing that, I couldn't back up and couldn't reverse it. And so I was just talking about the resilience of the market and how well the market is doing. Another great finish for the indexes. The Dow up almost 1%. 348 points. The S&P up over 0.5%. Not as big a move up on the Nasdaq. The Nasdaq was under pressure early and spent a fair amount of the day in negative territory, but rallied nicely at the end of the market and came up and finished in positive territory. A lot of the Magnificent Seven were under pressure and down a little bit today. I believe Microsoft, AMD, Amazon, Nvidia. I know AMD is technically not one of the Magnificent Seven, but those were all under a little bit of pressure today. I think it's just some profit taking. I think it's some repositioning. Nvidia has their earnings next week, and boy, expectations are so incredibly high for Nvidia. It may be difficult at best for them to post a really, an earnings report and a guidance that is enough to impress the markets. So, good day, good solid day. I have not dug into and read this article yet. I know Ford paid a special dividend today, or at least they announced it, and will pay it on the first day of March. I'm liking our shares of Ford as far as collar trading goes, and things are looking good overall. Tomorrow, and I wanted to talk about what kind of catapulted these markets and what it was specifically that really helped move these markets to the upside today. Pretty impressive move. So in looking at and going over what caused the markets to go up today, right out of the gate, we talked a lot about jobless claims. Jobless claims kind of came in where we expected. I got to be honest, I didn't even pay real close attention to these reports. We talked about them in the previous podcast, but I didn't pay especially close attention to these ones because I didn't think I needed to. The focus was, and jobless claims, by the way, came in pretty much on expectation. I mean, they were off a little bit, but it wasn't a big miss to the upside or the downside. And it really got overshadowed by this retail sales report. So let's dig into those numbers just a little bit and explain what happened. The retail sales numbers, the expectation was that they might get revised down. The prior month was a 0.6% increase. They were expected to come down quite a bit and go negative 0.01. This is month over month retail sales. And instead, they came down almost a full percent instead of In fact, actually more than 1 full percent, from zero point 0.6 to negative 0.8 is more than a percent down, and it was expected to be a little bit more than a 0.5% down from the previous month. Now, the previous month got revised down. These revisions, I'm always going to wonder on these revisions whether or not we've got competent people giving us these numbers. And if they are competent, I'm going to wonder forever how honest they are and versus how partisan they are politically. So that's a story for another day. But the reality is this number was a big miss. And the reason the market responded well to that is because with everyone seeing that chink in the armor, the consumer not as strong as they have been, the weakness in retail sales, and not just the weakness, but a big miss. Um, all of a sudden, that creates a scenario where there's hope again for rate cuts, or that what Powell and company at the Fed are doing is proving to be effective, and therefore more talk about the soft landing, more talk about the possibility that interest rates could come down. And so even though I didn't hear anyone of importance saying today, "Oh, look, we're going to have a great chance to be back to 4, 5, or 6 rate cuts this year," at least there becomes more hope that if there are cuts, they come a little bit sooner. And if there are cuts, there may be more of them than people were just thinking in the previous day. So that's really, truly what it comes down to in terms of why these numbers had a tendency to move the market. The consensus on the minus vehicles and gas retail spending was expected to go from 0.6 down to 0.2, which is still, month over month still going up. And instead that was down -5. These are big misses. These are not small misses. These are big misses. And I've been speculating for some time that a weakness in the consumer could prove to be something that weakens the economy overall, but shows that the Fed is succeeding in its mandate of reversing the inflation scene. And a weak consumer means not as much money being spent, not as much money to spend, and therefore supply has a chance to catch up. Inflation, as you know, is when there are too many dollars chasing too few goods. Well, if there aren't as many dollars being spent, but there's not a significant decrease in the number of goods that are available, then you get the reverse, and you maybe get some flattening or some deflation. Now, one thing that I heard this morning, I haven't had a chance to look into this in detail yet, is that this could be a function. These really low numbers could be a function of consumers spending the same amount of money and not getting as much for their dollar, which is still a problem in terms of how people feel about the economy. So I'll dig into that a little bit more and maybe have more to comment on that tomorrow. Speaking of tomorrow, we're going to get those PPI numbers. I've been talking about this all week. The consensus on PPI. Now, if you look at what the prior was, it was -1. It's expected to creep back up a little bit. The year over year is expected to drop a little bit from 1% down to 0.7%. And then, the without food and energy, it's expected to go up a fraction from last month. Without food and energy, year over year, expected to go down, be about the same on the month over month with food, energy, and trade services taken out. They've got all these different variations of PPI. The number that I think people are really going to be looking at is going to be this year over year number, both the core without food and energy and the year over year number with food and energy included. People will look at the monthly number as well. Just like we had on Tuesday, if these numbers are high, if these numbers are all up a little bit from what this expectation is or this consensus is, it's not going to have to be by a long ways. It's going to paint that similar picture to what we got on Tuesday, where the side of things ticking back up a little bit was enough to spook the markets and get people feeling less certain about where we're going economically and whether or not inflation's coming back. And if there's signs that inflation is coming back, then you have that chance for a sell-off. I think the market got spooked on Tuesday. I think maybe people are a little more prepared for the possibility of worse than expected numbers on the PPI tomorrow. So if we do get those numbers that are worse than expected, my expectation then for trading tomorrow is that we'll be down, but not nearly as dramatic a drop as we had on Tuesday. I think the markets will give up a little bit of today's gains and yesterday's gains and finish the week either flat to a tiny bit down, but I don't think it'll be the kind of sort of scary sell-off that we saw on Tuesday when everyone got a little bit spooked. FOMO is alive and real. There are a lot of people that just don't want to miss out on that next rally, that next big move up in the market. And so every time there's a dip for 1 or 2 days, that people have a tendency now to buy back in, and that's what we saw happen after Monday and Tuesday being down. Um, I will put on do a final podcast for this week tomorrow, a couple hours after the close of the market. I'm going to be skiing tomorrow during the day, so um, I'll get back a couple hours after the market is closed and take a look at everything that happened and sort of wrap up my thoughts for the week. A reminder again right now, and I'll remind you again tomorrow. Monday is a trading holiday. The markets will not be open, so we will not be doing a podcast. We will not be doing sending out any new trades or any trade adjustments. But everything that we normally do on Monday, we will do on Tuesday of next week. So thank you again for joining, everybody. Hope you have a great rest of your Thursday, and hope Friday is a great day for you as well. Bye-bye. Bye.